Kia ora, my name is Jess. I'm from the External Communications team here at the FMA, and you're joining me for another episode of Jess Learns to Invest. Today we're going to be talking all about cryptocurrencies, what it is, how it works, and most importantly, how to invest in it safely. Today I'm joined by journalist Peter Griffin. Peter has been in the business and tech space for over 20 years. Thank you so much for joining me today, Peter.
Thanks for having me, Jess. Yeah.
So could you kick us off by just telling our listeners a little bit about you, your background, and also how you got into cryptocurrency?
Yeah, look, I've been a tech reporter since sort of the dot-com bubble burst. First in London, covered the tail end of that, all the big companies of the time that were overinflated, a little bit like we're seeing with AI at the moment. So a lot of them collapsed. I covered the tail end of that, came back onto the New Zealand Herald and then worked my way up there as technology editor. And really for the last 25 years have been looking at the big disruptive technologies and how they're changing business, the economy and society. So social media, successive waves of things like artificial intelligence and crypto as well.
Awesome. Cool. And have you started investing in crypto?
I did, yeah. About 2018 was the first time I got into it. And I really got into it because of my interest in disruption and these old institutions in society and how tech is disrupting them in really good ways and bad ways as well. And I think crypto is the ultimate example of that. But I felt back in 2018, which was a long way into the evolution of crypto, because Bitcoin debuted back in 2010, just at the aftermath of the global financial crisis. And I didn't get into that until 2018, so it was relatively late in the game. But since then, even since the pandemic, we've seen millions of people become investors in cryptocurrencies for the first time. Yeah,
it's evolved quite a bit from when it first came out.
Yeah.
So could you start by just telling me what crypto is? Because for me, I just don't know anything about it. Like, you hear about it a lot. There's lots of different terminology. I feel like I know little bits and bobs, but I don't actually know what it is at the heart of it.
Yeah, well, it's really digital money in many respects. The big difference is it's not money that's issued by a central bank, like the Reserve Bank in New Zealand issues the New Zealand dollar, which we all use to exchange value with.
Yeah.
Cryptocurrencies act as a sort of a digital version of that. And the way I'd sort of describe it, it's like the difference between going from the old mail system where you put a stamp on a letter and you sent it through the mail system, and it took quite a while to get there, and it went through lots of different hands, and then it was delivered to the recipient. It's the old world is that. The new world is email, where it's going instantly, it's going digitally, and there's usually some sort of encryption, so it's a little bit safer than relying on the postman to take it across town and deliver it. So that's the fundamental shift. We're going from so-called fiat currency, which is dollars and notes and coins, to a digital world. But the big difference is that's largely unregulated. It's not issued by a central bank, and there are some efforts around the world to experiment with so-called central bank digital currencies. Like China, has one of those, where you actually have the government getting into a cryptocurrency, an official cryptocurrency.
Wow. Yeah.
We're a long way from that in most Western countries, but at the moment you can go and buy these digital tokens, they call them, which represent value, and all that really underpins that value at the moment is the trust you have in that particular cryptocurrency. And there's a lot of trust in Bitcoin as the biggest cryptocurrency in the world. Ethereum is the second biggest. So lots of people want to hold these coins and trade them as well. So there's a lot of value there, but there are literally thousands of cryptocurrencies, and there's a lot less trust and interest in those currencies. But it's a race at the moment, and there is a lot of players here. And as I've found since 2018, some of them skyrocket and some of them go to zero. They literally die because there's no interest in them. So it really is a fraught sort of industry. You have to go into it with your eyes open. But for me, the main impetus was not to speculate. It was to bet on the future of disruption and knowing that this is probably going to change the world in some respect, but I don't know exactly which coins are going to be the ones that are going to be worth $1 million in 2030.
You said a couple of names there, Bitcoin, and I know there's a few others. Are they the different types of Bitcoin tokens that you can buy or that you're putting your money in, essentially?
Yeah, that's right. So 2010, Bitcoin debuted. We still don't know Satoshi, the individual or group behind it. They've never disclosed who they are, but they came up with this incredible mathematical system for creating these coins. And there's only a certain number of Bitcoins that will ever be minted, 21 million coins, and we're on our way, over the coming decades to reaching that. So they decided to come up with a system where you had a finite supply of a digital currency. And the timing was really interesting. As I said, it was the aftermath of the global financial crisis. And while that system was probably in gestation for years before that happened, I think it was definitely inspired, the creation of it, by distrust in the financial system.
Right,
People looking at the financial institutions and a lot of the bad behavior that was happening, particularly in the US market. You'd seen the Asian financial crisis in the late 90s as well, and inflation as well, people's spending power being eroded by inflation, and a group of tech-savvy people thinking there has to be a better way. And the other side of it, which is the real disruption I'm interested in, which I think inspired them as well, is just how clunky physical currencies and dealing even with banks, and expensive. The fees you're charged, sending money overseas, it's got better, but it's still relatively clunky. People in the Pacific Islands have for years paid big remittance fees to send money home. So to come up with something that's frictionless, is instantaneously transferred, not through a central institution, but decentralized, meaning that you can just send it from my digital wallet to your digital wallet and pay a very small fee for doing that. I think that's what inspired the people behind Bitcoin as well.
And just to get into it a little bit more, how does it differ from actual money and, say, shares where you're investing in a slice of a company? How is it different? Because it is money, but you can't use it like money. From what I understand, you can't go out and buy a coffee with it or pay your mechanic, or can you?
In some places you can. So this is the sort of the weird grey area at the moment. And writing about cryptocurrencies, I've been frustrated that this hasn't happened faster, where you can use Bitcoin or Ethereum, any of these cryptocurrencies, as a means of exchange for all of those reasons, to just make it more convenient to have on your phone, just to scan a QR code like you can in China and Singapore and pay for something. That's been very slow to happen here. But ultimately, when you hold a share, you hold a legal right to a piece of a company, and you can buy and sell that. The difference is with cryptocurrencies is that there's implied value there, but it's all trust based. So technically you're owning a certain number of tokens, and as long as there's demand in the market, you can sell them, and people will want to buy them off you. Right. But you're not buying shares in a particular entity or anything like that. These are literally bits and bytes that are held on computers around the world, or the what they call the encryption, the keys to those, which sort of explain exactly what you own. You can hold the keys, and you need to put them somewhere securely. So you do, at the moment that is very valuable, but fundamentally it's nebulous as well. It's a bunch of bits and bytes, and it's only worth nearly $200,000 as we speak per coin, which is the price for Bitcoin, because there's all this pent-up interest for various reasons around the world. That's the only thing that gives it actual value.
And I know I keep saying the term blockchain. Yeah. What is that? How does that work? What is it, to start with?
Blockchain is the technology that underpins these cryptocurrencies, which, as I said, are decentralized. So the blockchain is like a massive spreadsheet, and all the transactions that everyone is doing that are related to Bitcoin are recorded in this spreadsheet. So it's a very efficient way It's a public way, so you can see all the transactions that happen on the blockchain. So it's quite transparent. It's also quite secure because you're using cryptography, really complex mathematics to make sure that these systems are kept secure. And these ledgers, based on blockchain technology, are at the core of making the system work. And they've all got their own ledgers, their own blockchains. Ethereum, several years ago, became very popular for very innovative blockchain technology. But the original one was Bitcoin, and that's the one that people still think has the most value, hence the price it's reached.
Mm. And what are some of the benefits of investing in crypto? Like, it's become quite popular recently, and I'm just curious, why is that? Why do people invest in crypto?
I think they see it as a rapid way to get a capital gain, to be honest. That's why we have seen these massive surges, bull runs in crypto, which is all about the sentiment. So I remember in the wake of the pandemic, there was a surge after the initial dip in the share market, there was a surge in investment in cryptocurrencies and in the share market as well. And so people, for a number of reasons, wanted to buy into cryptocurrencies. There was a massive spike. There was a lot of fad sort of trends like non-fungible tokens for buying, Bored Ape Club, things like that. Artworks encapsulated in the digital world and represented by a digital token. That became a huge thing. Then there was the crypto winter, where the value of everything collapsed. And now we are back in sort of record territory for Bitcoin and some of the other cryptocurrencies. So it comes and goes, and I think people, particularly younger investors, are looking at it and quite fairly are sort of saying, well, my chances of owning a house are very low at the moment. Yep. What else do I invest in? Cash is not paying much interest in the bank. The rate of inflation is eroding my cash in the bank. So what else have I got? And a lot of them are looking at crypto and seeing the market's going up. But it is a real roller coaster, as I know. A lot of my stuff has gone sky high, but it's also crashed as well. So I think the best advice I see from financial advisors is don't hold any more than 5% of your wealth in crypto. And the reason being that you're diversified, so if it does crash and you really need to get some value out of that, you're not going to take a massive loss. So you've got that diversification. But if, for instance, you have one holding in coins that goes up 1,000%, and that actually happened with one of mine. Solana has done incredibly well in recent years. That's just one of many cryptocurrencies that I happen to own, and that has gone up massively. So if you have a small holding of crypto, it's high risk, but it's potentially high reward.
I was going to say, is it a good strategy to have crypto as part of your overall portfolio? Because as I've heard across all of these different episodes, it's diversify. So
definitely,
yeah. Cool.
And I have a relatively high appetite for risk as an investor because I'm passionate about disruption. I invest in disruptive technologies, and some of them, particularly in the biotech space, if they don't get approval from the Food and Drug Administration, they can go from $20 to zero. So I'm willing to make a loss on those because I know that some of them, as we've seen with the NASDAQ stock exchange in the last 20 years, the returns have been significant. So it's, as I said, it's frustrating writing about this because it's littered with scams and grifters, but it just isn't happening as fast as I'd like to see it happen. And the efficiencies we could gain if we embrace this technology in a really safe way would be massive, but it's a lot more complicated. And there are a lot of vested interests who don't want blockchain technologies and crypto to flourish.
And I think you mentioned earlier how you've had experience with some skyrocketing and some crashing. Is market volatility, does it work the same with crypto as it does with any other investments? Like you ride the roller coaster, and you keep your money in there, you kind of do the buy and hold, leave it there if you see the market's changing. Does it work the same with crypto, or is it a bit different?
Yeah, I think so, but because you're not buying into a company as such, a lot of things can happen when a company's share price gets really depressed. People lose faith in the management of the company. So lots of things go on which can save the company and restore confidence in it. Yep. Or I've invested in listed companies that have been liquidated.
Yeah.
New Zealand listed companies. So you lose your shareholding. What you see happen with cryptocurrencies, there are some of them have people and organisations maintaining them, but by and large they will carry on as long as there's interest and sentiment is high for those cryptocurrencies. And that really is hard to judge, and I've never been able to figure out why, for instance, Solana, that one I talked about, really took off, and another one, Cardano, which I love the founder of that company. He's an incredible tech leader, but that one has been really depressed for years now. So fundamentally it is that they all have a vision and a slightly different vision for their technological approach to these cryptocurrencies. But in the real world, how do they operate? How efficient are they? What sort of fees are associated with using them? What sort of applications are they good for? Because a lot of them underpin financial transactions and new ways of doing things like loans, for instance, and exchange of value. But some of them are just better than others at doing it. But the sentiment is key, and I've never seen any other investment class where that changes and can be so fickle based on who knows what. Sometimes you see someone does a YouTube video, some influencer does a YouTube video, and because millions of young people around the world are watching that, suddenly that can be difference between a cryptocurrency surging and collapsing.
Wow, that's interesting. Crazy. And if someone has been thinking about it, but they haven't kind of invested in crypto yet, how would they start? Like, what would you recommend that they would do if they were a new investor who wanted to get into crypto?
Yeah, I'd start really small. As I say, don't start with maybe even thousands of dollars. Start with a couple of $100, and start with the big ones as well. Definitely don't go all in on so-called meme coins. Something you've probably seen on social media that is the flavour of the month and might be up 1,000% today, but it's just as likely to be gone, in a year's time. So start small and start with the trusted players, the big exchanges, the ones that have been in business for a long time. There's at least one big one in New Zealand that's been around for a long time. There are several big ones overseas as well. So do your research and buy from trusted companies. But then you have to make decisions about where you, for instance, hold your Bitcoin. Do you hold it yourself, or do you trust an exchange to hold that on your behalf? And that's where it's still a little bit of a scary proposition, I think, for a lot of investors. When you buy a share through a share registry, they have a record of that, you have a record of that. It's a bit different with cryptocurrencies, where somewhere those keys I talked about will be held, and that is the key to unlocking your crypto. And if you ever want to sell it, you need to have those keys. So making a smart decision about who you trust to hold that, or whether you don't trust anyone and decide to hold it yourself, which has some risk. That's a really crucial thing. But the good thing now about cryptocurrencies we've seen in the last year or so is the emergence of exchange-traded funds that specialise in cryptocurrencies. And we're even seeing in New Zealand a couple of KiwiSaver funds that are offering investment in cryptocurrencies. You're not buying cryptocurrencies themselves. You're not buying the tokens. You're buying into a financial instrument that has invested in these cryptocurrencies. So that's a really low-risk way to expose yourself to, for instance, Bitcoin, without having to go through all the convoluted complicated things to actually own the coins yourself.
And when you said like hold it yourself versus someone else, is that when we're the term crypto wallet? I keep hearing that.
Yeah.
Is that when, okay, that's kind of making sense to me now.
Yeah. So you've got these big exchanges who are, like stock exchanges, are facilitating purchases and sales of cryptocurrencies all day, 24/7, all over the world. And, there's some big trusted ones, and they will charge a fee for exchanging your crypto. Some of them will also hold your crypto coins on your behalf. They have a big digital vault somewhere, and they put all the keys in there, and they say, trust us, we'll look after them. The problem is we've seen in the history of crypto some massive failures of those exchanges. Mt. Gox was the first big one, a Japanese one that failed. Here in New Zealand, we had Cryptopia. At the time, was one of the biggest exchanges in the world, did very well. Unfortunately, it collapsed, it was hacked, and a lot of money was lost. And years later, they're still working through trying to recover that and give it back to the people who lost their coins. So you've got to be quite wary about that, which is why I say, if you are going to deal with these exchanges, deal with the big ones. Yeah. The alternative is a bit more complicated, which is you hold the coins and the keys underpinning those coins in your own digital wallet. And it can be a wallet that's on the internet, basically in the cloud, or it can be what's called a cold wallet, which is completely offline. It could be a USB stick that's encrypted.
I had no idea you could do that. Okay.
And all the people who are serious about this are paranoid about the security of their coins. Yeah. So they're putting their coins on a cold wallet that's completely disconnected. Some of them are even printing out the keys, because it's basically just a whole series of symbols and numbers. They're putting them somewhere really safe, because if all else fails, they know they can go and type in all of those characters and they'll get their coins back.
What's the big benefit if you were to put it in a crypto wallet and someone else is looking after it? Are there benefits to doing that?
Yeah, there are, because, it's not foolproof. If you have a cold wallet, it could get thrown out. For instance, like the poor guy in the UK about 10 years ago who had a hard drive with all his Bitcoin on it, and he put it aside somewhere, and his girlfriend thought that it was meant for the rubbish. It ended up in a landfill, and he spent over a decade trying to get the council to let him dig up that landfill. Yep. Because there are hundreds of millions of dollars worth of Bitcoin. And he's just, I think, given up. But so there's no system that's foolproof. And, I think a lot of people look at it and go, it's a trusted exchange. Their whole reputation rests on them guarding my Bitcoin or my Ethereum, and I pay them to do that. If they let me down, they let down the whole market, and their business is going to be toast. So they do, and a lot of them do put a lot of effort into keeping stuff secure on their exchanges. So I think for people who are interested in wallets, definitely a wallet that is a so-called a hot wallet, which is online somewhere, you'd really want to make sure that it's got good security and it's a reputable company. And probably 90% of people are doing that in reality. It's the 10% hardcore who are taking it completely into their own hands, literally.
And how would you go about investing in crypto? I'm guessing it would work the same as lots of other types of investing, so through apps, going online. What are the main ways you would go about investing?
All of those big exchanges have an app now, and we've got the biggest exchange, Easy Crypto in New Zealand, has an app, has a digital wallet. So any large player that takes itself seriously has a website where you can trade, but it also has a digital wallet. There are lots of independent digital wallets as well, and you don't have to use a digital wallet that's supplied by an exchange. And that's the great thing about this industry. It's not dominated by a small handful of financial institutions like like here we've got the four big banks. We've got Kiwi Bank, and then we've got some smaller banks, and they've all got their own apps. But in the crypto world, there are literally hundreds of apps, and people are innovating and doing different things and allowing you to do things in interesting ways. But again, it all comes back to trust. And really, when it comes to trustworthy digital wallets and exchanges, there's probably only a handful of them because they're the ones that exchange the bulk of these crypto trades around the world. So they have the resource to put a lot of time and investment into security and making these safe and trustworthy places to do business.
Mm. You mentioned earlier fees. What are some of the fees and charges that come with crypto?
Yeah, well, that's can be quite complicated because the way this blockchain system works, for instance, Bitcoin, you may have heard of Bitcoin mining. For this whole system to work, you have to do these complicated mathematical transactions to create new blocks on the blockchain. So it's a weird concept, but this is what makes the money go round. So there are people all over the world, we call it mining Bitcoin, but they are doing these complicated cryptographic transactions on their computer to unlock value on the blockchain, and they get rewarded for that. They get some of the Bitcoin themselves.
Okay.
And as time goes on and the supply tightens up, because there will only ever be 21 million Bitcoins, it becomes harder and harder to do this Bitcoin mining. It's an ingenious system where the transactions and the calculations get more and more complicated as time goes on. So you're having to spend more time and you have more powerful computers. So there are fees associated with that. There are validation fees. So every time you exchange Bitcoin over the blockchain, they need to update this central spreadsheet to make sure that everyone's on the same page and it's all safe and secure. So that's called validating the blockchain, and they charge fees for that as well because that uses computer capacity. And then there are fees for trading cryptocurrencies as well. So every time I go to Easy Crypto or Coinbase or one of the big exchanges, they clip the ticket as well because it's going through their system, their security checks, their customer service. So they are charging as well. So typically, you might be looking at a percentage point or 2% as a transaction fee if you're going through an exchange, and it accounts for all of those things. But what we have seen, and this is one of the big criticisms of cryptocurrencies like Bitcoin, is when everyone wants to trade something at the same time, when there's a run on the market, people are trying to sell all of their Bitcoin, or for those ones that are used to underpin financial transactions, when people are trying to buy lots of things, around Christmas, for instance, it can get very congested on these blockchain networks, and therefore the fees go up. You get prioritized based on the fee that you pay. So that's a fair way to deal with a constrained system where you don't have a system that can do all the transactions at once. But unfortunately, we've seen some horror stories where people have tried to transfer cryptocurrencies and they're paying 5 or 10% in fees, which is ridiculous. So there's a bit of work to do there. And I've been talking to a lot of New Zealand companies actually who are coming up with innovative ways to work on top of these blockchains. It's what they call layer 2 systems, where you can do all of those transactions and financial calculations and transfers without tying up the main underlying blockchain. So that means that transactions happen faster and therefore the fees are lower.
And are the fees are they told to the person? Like, can you see it easily when you're going to do it, or is it like a shock that it hits you later on, all these fees? Yeah,
you'll usually, particularly if you're going through an exchange, you will know what the fees are going to be. But then, you don't have to go through an exchange. That's the beauty of a decentralized system. If you have your digital wallet and I have mine, you could be in England, I could be here, and I could send it through. But usually your digital wallet system will tell you, okay, if you're going to do that, this is what the transaction fee is going to be.
Okay, yeah, nice. And what are some of the biggest risks? I think you've talked about a couple, but what are the biggest risks that people should maybe consider before starting to invest in crypto?
I think just the scams.
Yeah.
It's all the human element that goes on around that. All of the people who are trying to make money, they see an opportunity. Because it is sort of anonymous, it's very easy to track what's going on. That's the beauty of this central spreadsheet that everyone can see. It means that if we exchange cryptocurrencies, you can see an exact copy of that and where it all went. But the accounts themselves are often anonymous. You don't have to register as a Bitcoin user. So there are lots of people around the world who are using this, unfortunately, to transfer money around the world illegally, to launder money. It's been used for financing drug trafficking and terrorism.
Oh, wow. Yeah.
So what we have some protections in New Zealand, for instance, where to use a exchange, you have to give your driver's license or you have to give some identification, and that will be checked. These companies are required to do anti-money laundering verifications. So there's some protection there, but ultimately so many players have piled into this space because it doesn't have as much protection as it does in the traditional financial sector.
Yeah.
So you're getting all of these scams, people saying, come and invest in my what they call initial coin offering. I've got this new venture. Instead of giving me they want your physical money, but instead of giving you a share in a company or some physical assets, they will give you these coins as well. And they'll put a value on those coins, but they've just made that up based on what they think this venture is going to be worth. So we've seen lots of people lose their shirts that way. And then just the everyday scams where, people are saying, send me some money, but can you do it as Bitcoin, please, for convenience to cut down on these fees, or it'll speed up the process. If you send me this money and I'll give you whatever I'm promising you, but let's do it quickly via the blockchain, via Bitcoin or Ethereum or something like that. And we've seen so many people lose money. And the reason they're doing that is they can circumvent the banking system, which have more checks and balances.
In cryptocurrency, it's currently unregulated in New Zealand. So how do people go about making sure that they are investing safely and not falling for some of these common scams?
The institutions, both here and in, for instance, the US, that are involved in this industry, there is some regulation of them. They have to run these anti-money laundering and anti-terrorism financing checks. So while there is no dedicated legislation around cryptocurrencies in New Zealand, it's a little bit like artificial intelligence where there's no AI Act.
Yeah.
But there is a Privacy Act and there is a Human Rights Act. So there's a patchwork of legislation around financial services, some of which protect you. But what we are moving towards in other countries is dedicated legislation, and we've seen that in the US this year, where the Trump administration has passed several bits of legislation which are designed to legitimize the cryptocurrency space by making it safer to invest in it and give people more confidence. And that is yet to shake out what exactly that will mean, but there's at least 3 big acts that have been passed this year alone, which will do things like, for instance, there's a type of cryptocurrency called a stable coin, and this is designed to allow you to invest in cryptocurrencies, but to have a lot more surety around that asset because it's underpinned by real things such as US dollars. So the US government came out with a new act. It's called a Genius Act, whereby every crypto token that is a stable coin has to be underpinned by a US dollar or a treasury deposit. So there's real assets underpinning this nebulous digital token. And so that's a really good thing, so that there are people, if you want to, and I think this will be really valuable when cryptocurrency actually does become a really convenient means of transfer of value. So we are using it instead of physical money to pay each other, to be able to have this asset that is underpinned by a bank vault full of money. That's a really powerful thing.
And I think earlier you said when new investors are coming in, make sure they're going to the right platforms. How can people make sure that it is legit, some of the platforms that they're going to? So is it going to the main exchanges that you were talking about? Or, how do people do that?
Yeah. Look, again, it's all reputational based. So it's not as though there's, official government endorsement. Definitely not a government endorsement of any of these outfits. It's really about their track record. But even some of the big ones, the biggest ones in the world really are Binance and Coinbase. And if you do a Google on Binance, it's had its CEO went to prison for a while. Its global CEO. So this is the thing about disruptive industries. A lot of those players, they're really attracted to the grey areas and the loopholes. This was the same with Uber. Google did this, with Google Maps and Google Street View, just looking for, okay, there's no regulation here, there's no red tape. I'm going to try and exploit that to create a business. And these guys were exactly the same. So a lot of them played pretty loose and live with the rules to begin with and were penalised for it. But it's sort of shaken out now in 2025 where, those big players and the big one in New Zealand are seen as legitimate players because they have hundreds of thousands, if not millions of customers. So it's starting with those players, I think, who have high trading volumes and therefore have a lot of assets they're holding on to. But what we will see also is, and again, this is coming out of the US and Europe, is a lot more transparency into these companies. So, for instance, that Genius Act around stablecoins, there are mandatory audits that are part of that legislation. So you actually have to prove to the US government that you have that bank vault full of dollars underpinning your stablecoin. And I think we'll see more and more of that where they are holding on to a lot of assets, but the government wants to make sure, for instance, that they're not using those assets to invest somewhere else.
Yeah.
Because we've seen exchanges do that where they basically took in all of these valuable coins, sold the coins, invested it in something else, hoping that they'd make a lot of money back using their customers' money.
Oh my gosh.
And FTX and others, there was exchanges that collapsed because of that. So while part of cryptocurrencies was a move to get away from the traditional financial system, there's a reason that there's high trust in banks because they have a lot of regulation around them, and even more so, this year with the $100,000 deposit guarantee scheme. So you're not going to lose your shirt entirely if the bank collapses. At the moment, there's nothing like that when it comes to crypto.
What are some of the biggest misconceptions with crypto? Because I'm sure there's a lot of myths out there and things that just aren't true. What's one of the main ones that you'd want to set straight for new investors?
I think the main one, this is really, I think, is a warning to people who are eyeing it up as a way to sort of stay anonymous, is that it's not really. There's been lots of examples of fraudulent activity. It's pretty amazing now what the authorities can do, because at some point most of those transactions will be tied to a digital identity or an identity that you've given. So it's not the Wild West anymore. As I said, if you go through an exchange, you're giving your ID.
Yeah.
And even then, through what wallet you're using, there are ways to track. So if you're trying to launder money or do something nefarious, really watch out. And also, it's not as though it's like a tax-free environment or anything like that. So if you are trading, that it is going to attract taxation. So it's not a way to avoid paying tax, to dodge tax or to, send money overseas to avoid paying tax. So I think there is this reputation or this idea that because it's unregulated, I could sort of do whatever I want there. Well, actually it's not.
And we touched a little bit on scams. I just wanted to come back to it just to help people understand what some of the key words or things that they might see that should kind of scream red flag, don't touch it. Like, how do people approach crypto scams? It's called kind of offering you a guaranteed money back. Is it what kind of things are?
I think anything at this point in the evolution of crypto, where anyone is asking you to pay in cryptocurrency.
Yeah, okay, good one.
I mean, there are legitimate use cases for that, but they're very limited and they're really in the geeky realm still. So, there are some companies that are raising, money for, literally to launch their company, and they're selling coins. So, so that is legitimate. But for the majority of people, when someone is approaching you through social media, and instead of saying, go to my website and pay via my Shopify basket, instead of that, they're saying, send me, a fraction of a Bitcoin, that's a red flag straight away.
Yeah.
And that's unfortunately where people still keep falling into.
Yeah.
And it's getting better on the banking side, where, they have things like the pay's name has to match the bank account number and all that sort of thing. So I think that's cutting down on scams. But unfortunately, and it is quite a big rigmarole to get people to pay in Bitcoin if they don't already hold it. They have to set up a wallet, they have to buy some.
Yeah.
So we went through a wave of that, but I think the returns on that from scammers was found to be a lot lower. So, but there are still plenty of efforts to try and get people to pay for things in Bitcoin.
Yeah, that's a good point. I actually wouldn't have thought of that as a big red flag in the kind of scam space. And what do you reckon is the future of crypto? What does it look like? Because I know it's kind of come quite a long way since it first came out. So, do you see a future for crypto?
Absolutely. And, I'm still holding out, and I interview a lot of people who are convinced that it is the future of money. It is the future of transferring value in a digital way, that it's going to empower, particularly in the developing world, where we've seen, in Africa, for instance, because they had really bad telecommunications infrastructure, they were able to leapfrog all of the fixed line infrastructure and go mobile. And that created a mobile banking revolution in Africa, where everyone can transfer money on their phones. So in the developing world, where there's low trust in financial institutions, I definitely see scope there. But for us here in New Zealand, I think where it will hit mainstream is when we can use it as a means of transferring, of buying and selling things easily, person to person and via shops. And we are seeing, as a intermediary step, we're seeing some companies that are partnering, for instance, with credit card companies. There's a great New Zealand company called Immersive that's done a lot of innovation. They've partnered with MasterCard. So you have a MasterCard, you can pay at any MasterCard terminal around the world, but you're paying out of your Bitcoin wallet.
Oh, wow, yeah.
So this is the blending of the traditional financial system and the emerging cryptocurrency landscape, and it's legitimizing that as well. So I think that's really valuable. And then the really exciting thing, I think, is when not necessarily cryptocurrency, but the underlying blockchain technology, when it makes life a lot easier. All the things that are clunky at the moment, whenever you buy and sell a house, very expensive, lots of lawyers involved, and really all they're doing is shuffling around paperwork. If you're able to automate all of that on the blockchain, and I can verify it with my digital identity, and you can as well, and then we do the transaction, and it's recorded on the blockchain, and no one can scam us, and I transfer ownership of my property to you, and it's legally recognized on the blockchain. That's going to be a game changer in anything where information needs to be transferred, wedding licenses or health records, insurance policies. The government is working on a version, it's not blockchain-based of this, but digital identity for digital driver's licenses. In future, the blockchain will be a highly efficient way to do that. But it's been slow to happen. There are a lot of companies that are doing really innovative things and have come up with prototypes of how this could underpin the digital economy, but it's really all about that trust. Are you going to trust a financial institution's business or a government's service on a blockchain technology? They're really not ready to do that at scale yet. So it's got to get the trust and the understanding of the wider population before it takes off.
And I've noticed that you've used the word trust a lot.
Yeah.
So for any new investors, is it really important that they kind of trust the platform that they're using and trust the type of coin that they're investing in? So would you suggest that it's important to kind of do a little bit of research before you just get straight into it?
Yeah, it is, and be careful on the research, because what we saw sort of in the wake of the pandemic was this whole wave of influencers who
that's true,
sprung up, particularly on YouTube and X, these sorts of platforms, and they seem very knowledgeable, but you have no idea what credentials they have. They may have vested interests. They don't disclose their interests in particular coins. They talk very knowledgeably about which coin is going up. They'll put up complicated looking graphs suggesting why you should buy now because this is going to spike. So be really wary of all of that, But educating yourself by reading up about it, reading some of the seminal books about cryptocurrency is a really good idea. But really, it does come back to trust, and those institutions and companies that have a track record in doing high volumes of this. A high trust as a result. People come back and do their business again and again with them. That's where to start.
Thank you so much for your time today. I feel like I've learned so much more about crypto than I did coming into it. I actually didn't realise that they were called tokens and you were actually kind of buying digital money. I'd be curious to know what your one takeaway for someone is who's listened to this whole episode. What is one thing you want them to go away with knowing about crypto?
I think it's not quite ready for prime time, so but it will be at some point. So if to be financially literate, particularly if you're a young person and looking to the future, it's really good to, even if you don't invest in it, to understand what's going on. Don't just dismiss it as something that is completely irrelevant to you, because it is. There are literally hundreds of billions, if not maybe $1 trillion or more of this. So it can't be written off anymore. So this will be part of the future financial landscape, and I think the more literate you are about it now, even if you're just a intrigued observer rather than an investor, I think it's going to serve you well.
That's a really good point, because I would say I've probably just put it aside because I don't understand it. So my brain is, it's not for me. I don't get how it works, so I'm just going to put it over here.
I know so many people when I say that, that I've invested in cryptocurrencies, and they just go, "You're an idiot." Yeah,
they're like, "What are you doing?
Why would you do that?" And they, who knows? Maybe they'll be right. Maybe time will show. Because the thing about cryptocurrencies is, why did Bitcoin seemingly come out of nowhere in 2010? And there were reasons underpinning that, and it was a beautiful technology that whoever it is came up with. But what's to stop another one appearing in 2026 that is even more technically brilliant than Bitcoin and becomes the new thing? And then Bitcoin goes from nearly $200,000 a coin New Zealand to $2 a coin again. Yeah. So there's always the risk of that. But I think the more that we that we understand it's not just a black art or a black box, that it's not just this thing over here that is really, which it sort of still is at the moment, it's in the realm of speculation for so many people. When you actually see that this is about changing the digital economy and how we transfer value, and that the philosophy of this is to empower people, not to scam them. I think once you're thinking about that, you'll just be a much more confident investor in whichever coin or blockchain system you want to put money into.
And as you said, you can put a little amount in, so it doesn't have to be massively risky if you don't want it to be.
Yeah, and that's why I think a lot of people now with the likes of Sharesies and share trading apps, they're really comfortable, and it's possible now to put in. You don't even have to own an entire share. You can put an Apple share. You can own a fraction of an Apple share, and that's become a comfortable thing for people. No one can own, or very few people can own, an entire Bitcoin anymore because it's worth nearly $200,000. But you can own 0.0002% of a Bitcoin. So it's not feeling like you need to have a big holding in it. It's having a small holding initially and just tracking it. I've never spent or never withdrawn any of the crypto that I've bought. It's all still there because I'm really interested to see what happens at 2030 or 2035 when this stuff is actually, and not all of them will, but one or two of those cryptocurrencies might underpin something really interesting and valuable in the economy. That's what I'm holding out to see, but I'm not reliant on that because it's a tiny, tiny amount of my overall investment pot. So it's not as though I'm thinking I need to flick that to buy something else. I'm just going to let it sit there, and hopefully over time it will massively increase in value.
That's a good point that you said about that, because I keep hearing that everywhere. It's kind of put your money in, don't freak out, don't just pull it out. And I'm guessing same with crypto, right?
Especially when don't get into a situation where you have to sell at a loss, and that's a devastating thing. And lots of people have done that, because once the sentiment goes, it's sort of like the typical boom bust cycle in the share market. People want to get out, they race for the doors, and we saw a lot of that post-pandemic with the crypto winter, people trying to get out. And then it's about not being greedy as well. So, look, that one I mentioned, Solana, is up 1,000%. If I was really interested in profiting from it, I probably would have sold it quite a long time ago, but I'm intrigued to see where it goes. It comes back to what your motivation is as an investor, and I'm motivated to see where it all turns out.
And if people have been listening this whole time and they want to find out more about you, they want to keep hearing about you and all the cool things that you're up to, where can they find you?
Yeah, go to businessdesk.co.nz. That's a financial news service. It's part of the NZME Group, New Zealand Herald, and that. So a lot of my stuff is there. I've got a weekly podcast called The Business of Tech, which delves into all of this disruptive sort of tech, like artificial intelligence, crypto, and where things are going. And so that's my goal over the next couple of years, is actually to try and break this down a little bit for people.
Awesome. Thank you so much for your time today, Peter. And thank you so much for listening. If you want to find out more about cryptocurrencies, you can head to our website, www.fma.govt.nz. We have our full list of warnings and alerts there as well, so make sure you check it out before you start investing. We'll see you next time. The content of this podcast is of a general nature and is not financial advice. The thoughts and opinions of guest speakers are not those of the FMA. The FMA recommends that our audience seek advice in respect to investing from a regulated financial advisor. The FMA does not accept any responsibility for loss that any person may suffer from following it.